Okay, so it is 11 a.m. Eastern Daylight Savings Time, and I think we can get started. So let me know, Adinda, when you start the recording, and I will get started. Okay, so welcome to another webinar here at FX Street. My name is Fan Yang, CMT and Chief Technical Strategist at fxtimes.com. Throw in the link there in the chat. And so I'm going to do 45 minutes of presentation today. Look at some of the trades I'm in, some of the trades I'm planning, and pretty much look at the technical setups across the currency markets. Okay. Just remember, trading Forex involves a substantial risk of loss and may not be suitable for all investors. These webinars are for educational purposes only and do not constitute trading recommendations. So with that being said, I want to start with the euro dollar, and this is sort of a follow-up to the webinars that I do on in FX Times. Well, I call them market intelligence briefings, but this is what we talked about this early morning. The euro dollar here at 1.3260 area, 50 area. Let me just backtrack a little bit, or actually, okay, it fits the screen. So basically, to start the U.S. session, we saw some overnight risk off and some dollar strength overnight. This market came down here with a swing projection like this, down to 1.3250, which was a very important support. If we back out to the 4-hour chart, or actually even the 1-hour chart, we see that yesterday we found some support as this cluster, our previous neckline, to a inverted head and shoulders pattern. Okay, shoulder, head, shoulder breakout. And then since this breakout, the market has been consolidating. So we first tested that support zone, and we did get a little bit of support there, a little bit of demand there. But the market came up only 61.8% of this previous swing, and then extended another leg down. So now we're testing a second key cluster of support. You have 3 support factors here: a rising trend line, you have your 200 moving average, 200-hour moving average, and you have your 50% retracement level. So at the moment, you do see some support there. And this came after, the market slowed down ahead of the jobless claims data at 8:30 a.m. Eastern Time. And since that data came out, the market has been rejecting the downside. But you still see these doji candles, right, in the 1-hour chart. So doji candles basically signal that our previous trend here, overnight trend, very short trend, is exhausting. And there's some good reasons here, as we mentioned earlier, the 3 support factors. But even though the bearish momentum here is sort of stalling out, there is no bullish momentum yet. Going back to the 5-minute chart now, okay, overnight, the bearish momentum can be reflected by the RSI dipping below 30, staying below 60, and then tagging 30 again. And as long as it stays below 60, we can say that the bearish momentum has not been cleared out, has not been killed. Okay, there's still some maintenance of that bearish momentum, and therefore, if we are to confirm a bottom during the U.S. session, we need to see the RSI push back above 60 and preferably even back above 70 to establish bullish momentum. Meanwhile, price action needs to clear this this consolidation area where we have resistance at 1.3288 or 90. So clearing back above 1.33, I would say, is a good sign that the market has bottomed out and is looking to return at least to our consolidation highs here. This right now, I'm looking at this decline as a consolidation, as a correction against our rally before. Okay. So I'm still bullish on the euro dollar, especially at these levels. Okay, I do actually have a position, one at 1.3290. Then, in the Asian session, I was thinking, okay, do I exit and try to re-enter, or do I hold on to it? My original plan was to hold on to it and add another position at about 1.3260. And so far, both of those triggered. And the reason is, I would therefore have an average of 1.3275 as my entry. Okay. Now, I think below 1.3250, below these lows here, today's lows, especially if you see the market fail to break above 1.33 and then fall back below 1.3248 or 50, this trade doesn't look good anymore. Okay, the bullish outlook back towards these highs and even higher towards 1.3450, which I'll show you why in a moment, that outlook weakens. So I have my support below at 1.3220 area. Okay. Now you look at this chart and you note that there is a support pivot here at 1.3190 area. Okay, so there could still be another push, but I think by then the bullish outlook will be limited. I would limit that to 1.3280 area. 1.3280, 1.33 area, and then consider the bearish outlook from there. Okay. But for now, I'm looking for some further upside. Okay. Now, when we get close to 1.3450, there's going to be a pretty significant, pretty key trend line. Okay. This goes all the way back to May of 2011. So May high here, and then September or end of August high here. So connecting those two, okay, and then also connecting this high here from October, end of October, we see this trend line coming down, and the market would be testing that at around 1.3450. So for now, my bullish outlook is to 1.3450. Okay, so that's the euro dollar. Looking for another push to test the important trend line here. Okay, so pound dollar is another pair that I was in at 1.5870 area. I was planning to, well, first of all, let me go back to the 1 hour chart. Looking at the 1 hour chart, okay, so here's yesterday's low here. Okay, I was looking there for support 1.5850, but it actually bottomed out at 1.58, like 60 or something like that. And then again, just like the euro dollar, my plan was originally to actually scale in again as the market neared 1.58. But that didn't happen. The pound dollar is holding our previous low and is showing us some bullish push. But again, in this 1 hour chart, you look at the RSI, it's stuck between 40 and 60, so it's sideways. A break above 60 would add confidence to the bullish outlook. The bullish outlook is first back to the 1.60 high here, and then with further upside to 1.6150. At 1.6150, I'm looking for a bearish reaction. When you look at the daily chart, that is a resistance pivot established here in October, November of 2011. All right, so so I continue to be bullish in the short term for the pound dollar, but that medium term resistance is going to be important to monitor for another short term bearish outlook possibly back to 1.58 or 1.5850 area. All right. So that's the pound dollar and the euro dollar. And guys, feel free to ask me to look at any pairs you want. So those are the two I'm in right now, and I'm monitoring the 5-minute chart to give me at least some confidence. Or if not, you see, in the euro dollar, the RSI hasn't broken above 60, so I'm not very confident just yet in this trade. The pound dollar shows a little more promise with the RSI pushing above 60 and about to tag 70. So at least in the intraday momentum, or at least the intraday momentum is showing some promise in the pound dollar. Okay. Let's take a look at another pair that I'm preparing for. Here is the pound yen. Okay, so let me answer that question. Gold, you long euro dollar now or just bullish? No, I long the euro dollar yesterday at 1.3290, and that didn't work out yet. And today, I scaled in a second entry at 1.32, just below 1.3270. Okay, and okay, so the average, I was wrong before. The average is actually 1.3280. Okay, not I think I said 1.3275. But the average of those two entries, pretty much 1.3280, is where I have my euro dollar long. Okay, let's take a look at the pound yen here. I wanted to take a look at this, looking at the 4-hour chart. And I mentioned this earlier this week about this rally. Now, first of all, looking at this decline, right? And this applies for the euro yen as well. You had this 1, 2, 3, 4, 5 wave dip, and to me, that's the start of a corrective wave. So when the market started rallying, I mentioned that this looked like it could be a bull trap, just like we had earlier. In our previous consolidation, where we had one dip and then a rally that looked like it was a bullish continuation, but it was really just a part of a flat. Okay, and then the market came back down to a previous low and then came back up. So it's important now to see if the same thing is developing. Okay, so there's two ways to look at this. A very apparent structure is a double top. This, anybody can look at this chart and say and tell you that this is a double top forming. It does look like a double top formation, right? With 130 as our key support here. I would say 129.70 to 130. So it's a zone of support. Okay, and so far the market is actually respecting that. Now, if the market stays below 131.50, I'll give it some elbow space, 131.55, 131.60. If it fails to push above that, and then, shows a strong downward push, that means we're respecting the middle of this, and there's going to be a bearish bias to push lower. Now, I like it if the market actually already broke below 129.70, came back up, failed to break above 131.50, then I would look for another swing down. The fact that the market held above 130, takes away that bearish bias, in my opinion, and this could very well develop into, hey, a completed flat. Okay. But again, to the upside, same thing. If we come up here and then the market comes down and respects the 131.50 level as that's what I call a central pivot. It doesn't have to be the middle of the exact middle of the range, but it's somewhere in the middle, and it's acted as a pivot. You see coming back here, a pivot here, support here, resistance here. Okay, support here for briefly before the market crashed below it. So 131.50 is important. If this does revive the upside outlook, it needs to stay above 131.50 to make it more clear. This is exactly what happened before. Okay, after this consolidation, here the market came back down, tested the central pivot of our previous range, which was at 128.20. Okay, resistance here. Let me just make that clear. Resistance here, support here, and then again support here, finally showing the market returning to the bullish bias. So here, resistance, support, resistance, brief support, and let's see what happens now, how the market reacts to that middle. All right, so that's the pound yen. It's in consolidation, so I'm not bullish or bearish at the moment, but I do have a bullish bias in the medium term. When you look at the daily chart, this is a very strong push. And if the market does does double top, I would then open up some bearish outlook. Again, still in the short term. Okay, let's say the market does break below 129.70 and then holds below 131.50. That's a double top. A conventional double top projection, a breakout projection, is to take the width of the double top and project it into the direction of the breakout. Okay, where we see the next important pivot area. So you see here, support here, previously acted briefly as resistance here. Here it acted as resistance. Here it acted as resistance. So this 126.50 area up to, I would say, 126.55 area, maybe even a little higher, there's going to be an important support. Give it some elbow space. I say it could actually extend even lower to 125.35, 50% retracement. Okay, but this is the zone where I would be looking for renewed buying in this pair. Okay, now, I'm not saying the market might not even get there before pushing higher. Right now, the yen weakness is stalling out. It's the end of the fiscal year. There's some repatriation, so that gives the yen some strength, or at least that holds off this yen weakness. Now we're nearing that end of March, so when we get into April, which is the next fiscal year, that repatriation dynamic of repatriation might be over, and I would continue to look bullish for the bullish outlook in the pound yen. And what are the targets to the upside? Well, short term, 135.17, 20 area. You see here we had a strong reaction of the market before. All right, here as well as back here earlier in 2011, here during mid-year. So that's the next resistance pivot. Then I'm actually looking for 140. All right. So if the market does get down toward 126.55 area, 127 area, that's a lot of upside. And if you plan a stop below these support pivots, you could see that. I'm not going to do the math here, but you could visualize uh, the reward to risk here. Let me clear these out a little bit. Okay. All right, so that's the pound yen. Boyke, I don't have the dollar rand. I don't have the South African rand here. So we're not going to be able to look at that pair. Gold, I don't know if that's a question or a comment here. You can hold trade for a long time. Perhaps you are a position trader. You know, as I got a little more busy these days. I used to look at the market a lot in the 5-minute chart. So a short-term intraday kind of trader. But now I'm setting up, yeah, like you said, more of a position trader, more looking for the weekly swings. Okay. But I do still look at the 5-minute chart to get into my entries. For example, in this 5-minute chart, as the market tags the lower Bollinger Band, now my Bollinger Band parameters are different from the conventional Bollinger Band parameter. I use 3 standard deviations, and I use the 200 moving average. So it's a much wider band. Okay. Now, here, as the market tags the lower Bollinger Band and as it gives you 3-point bullish divergence, this became an area where I considered that second entry, or this was an area I considered the second entry, and the 5-minute chart does show me that the market has slowed down and right after the jobless claims release, the market didn't continue lower, so that shows me, hey, the market might be trying to build a bottom here. Now that could take a while. It could take, right now it's taking a good first half of the U.S. session. We'll see what happens after the second half. Okay. Fan, could you tell us something? Is it the market or market makers playing the game? As far as I know, market is abstract. It is human beings that make up the market, but they want you to believe it is the market doing this and that, not human beings manipulating the price. Well, the market is comprised of many characters. You have individual traders, you have your algo traders, you have central banks. So you really have to consider that there's a mix of different elements in the market, all with different purposes. Even though, we have our main purpose is to make money, right? To quote unquote profit from opportunities in the market. Speculators, pretty much speculators. Some central banks are not in it to make money per se, but rather to hedge, or there are some political factors as well, like the Japanese yen is weak right now because, hey, the Japanese government wants to is concerned about their exports, so they don't want that strong yen. So the talk of stimulus, the talk of their version of quantitative easing is what's been weakening the Japanese yen. So it's a factor of all these, you have all these elements, and you just have to get a feel of which elements are strongest. For the Japanese yen, it's definitely been the central bank. And, towards the end of March, it's the end of year repatriation. So that, so when we look at the Japanese yen, looking at this rally here, the announcement of that QE was somewhere here before the market had bottomed out. So the market was pretty much sideways for a good half of the year and into this year, and then QE, Japanese QE, pushed up the dollar yen. And plus you had some better data in the U.S. So as far as safety flow, safety flow, usually the U.S. dollar strengthens during risk aversion. Japanese yen strengthens during risk aversion. Okay, but that means the dollar yen, you could compare their economies and what their central banks are doing, and you could take out the sentiment part of it, and you're left with comparing their economy and their central bank. Okay, so that's why I'm still bullish on the dollar yen. Okay, we have had some recent talks of Bernanke and the Fed is still leaving that option of quantitative easing for the dollar, for the U.S. dollar. So recently the U.S. dollar has been a little bit pressured, but I don't buy it. I think the economy, at least the data, hasn't been that poor, and inflation is I guess not low enough for QE. So that's why I still have the bias here for the dollar yen to go up. And the thing is, there is some strong resistance up here, right? Let's take a look at the weekly chart. When the market gets into the 84.50, 85.50 area, the weekly chart shows that we had some strong reactions there before. Here in 2009, strong support. Here in 2010, the market was sliding and stalled out there before falling further. Then it was testing it as resistance, failed a couple of times, and then pushed the market lower to create record lows. Okay, now the market again is nearing that area. So important level to monitor. At least maybe in the short term we get a bearish bounce there. But look, if the market consolidates around it and pushes above 85.50, then we have further confirmation of the dollar yen reversal. Okay, I think we are, when you look at the daily chart, weekly chart, we got our first signal of reversal. Breaking up above this trend line, breaking above some key levels down here for the bottom here. Okay, RSI pushed above 70. You see where the RSI was since 2006. It's been held under 60 and tagging 30. That's a persistent bearish momentum. Okay, so I add the 60 and 40 level for that reason. Now the RSI pushed above 70, so in the very short term it might be a bit overbought, but even that's resolved because the RSI is below 70 now. Even though at these levels we might be overbought, the fact that it did reach 70 gives us the bullish signal looking ahead. Okay. Okay, Boyke, if one blames the market, that person is not trading as should. Yeah, the market, I hear a lot, the market's not logical, it's not rational. Sure, that's just how it is. The market is what you trade. So yeah, you're right, Boyke. You can't really blame the market. You just have to react to it, try to understand it. And the gentleman before, the presenter before, has a good point that, hey, if the market doesn't make sense to you, stay out of it. Okay? Okay, so gold, all I could understand is a human being manipulating speculators or central banks. Manipulation, that to me the word manipulation has intent to it. Speculators don't really have any intent to actually move the market. They know they can't. Central banks, on the other hand, do have that power. Like you saw that in the Japanese yen. You see that in the Swiss franc. Let me now actually bring up the Euro Swizzy. Because since the SNB established quote unquote a floor at 1.20, the market has been respecting that level and has gone into such low volatility when the market gets close to it. So here's the daily chart, and it's not a good chart because let me have to bring it up like that. Okay. So here's the Euro Swizzy getting close to that 1.20 level. Okay, and once again, I'm planning a trade here. Okay, I did plan a trade here earlier when the market first came down here and started to just get into a very low volatility kind of market. Okay, the plan here, and I'll share this with you, is was an entry at 1.2040, which I did get in, and then there was another planned entry at 1.2010. Okay, the reason for that is, one, I start to see support at 1.2040. Okay, but I know the floor is at 1.20, and I want to place my stop below the floor, because if the floor cracks, then I think something is shifting. The market's not believing the floor, wants to test it. Swiss franc is strong. If that does happen, then you could set a stop, maybe 1.1970. Let's say 1.1970. Now, 1.2040 to 1.1970, that's 70 pips. Okay, that's a bit much for me, especially when you look at the reward, which my first target was 1.2125, our previous pivot here, and you see it as an important pivot going back. Support, resistance. So 1.2125 from 1.2040 is, that's not even 100 pips. Okay, that's 85 pips. So 70 risk, 85 reward. That's not good. That's not attractive at all. Albeit there is there's a more aggressive target too, but I want to make sure my conservative target is at least acceptable. I know the aggressive target is attractive, but I want to know that the conservative target is acceptable 2-to-1. Now, if you get in at 1.2010, your reward, your entry is 1.2025, right? 40 and 10 average 25. Okay. Then you have a 55 pip risk and pretty much a 100 pip potential reward, and that actually comes up to 2-to-1 or close to 2-to-1. So that was the plan here. I had a little more confidence because of the fundamental factor of 120 being the floor. Okay, so we did hit that first target, 1.2125, and then the market started to slide very sharply. I wasn't able to get out at the top, but I did get out, and now I'm waiting again to do the same thing. Okay, you're pretty much looking at a range here, and we're at the range support area. So planning for a long position here, that's in my scope right now. It's on my radar. So the support is pretty much from 1.2030 up to 1.2050. You see the market hasn't been able to, or has been trading sideways since entering that support zone. Okay, so again, this is the scaled in entry. I talk about scaling in a lot in my market intelligence briefings. Scaling in can help from the entry side as well as the trade management side when you look at reward to risk. Okay, there's always that tension where you want the market to come back to a price that gives you really good reward to risk, but the tension is that the market might not get there, and if it shows you a reversal or shows you a signal to get in earlier where your reward to risk might not be as attractive. If you have a planned and second entry then you kind of resolve that tension, because you could get in earlier than you wanted to and plan to get in if the market does continue to come down to where you originally planned for better reward to risk. So you have sort of two ways to capture that trade. I think that's a better way to look at entries, having at least, or I wouldn't say at least, having just that double entry technique. Okay. Sam Shale, one must stick to the technicals. They tell the story, or does not need to hold a grudge against the market participants in order to succeed. Yeah, I mean, it's wasted energy to blame the market, to call the market irrational, this or that. You could state the fact that, the market doesn't seem rational because you have a certain bias and the market isn't showing that. You have to realize that sometimes it takes time. The market gets that information and it doesn't process it like you do in your head. There's so many factors combined that even if you're right, you might not be right as far as timing goes. Okay. Let's see, what other pairs do I want to look at? Okay, so dollar loonie is another pair I'm planning out for a trade near 1.0050. Okay. 1.0050, I'll plan a trade back down to 99.50. Okay. That's just a conventional range trading concept here. Dollar yen has been range trading since February. It's not a perfect sideways range. It's been flipping between low volatility and high volatility. Okay, let's observe that. Here we have some, the market's sort of in sideways action. Then you have some you have higher highs here, and then you have some lower lows here. So okay, so there's some expansion. Boom, you have a breakout to the downside. That breakout does not follow through, does not confirm. It would be, if 99.50 held, that would help confirm. That was a previous pivot here. The market did consolidate, but it popped up higher. And since then, since this bout of wider volatility, dollar yen went back into low volatility. Okay, and then again expands into wider volatility. So it hasn't been there's no clarity in this range, but we do see consistent resistance here at 1.0050 area, maybe up to 1.0070. Okay, so I'm waiting for this to come up to this level. Okay. Now, when you do a range trade, I have a couple of guidelines. One, you want to still go into the direction of a previous trend, and in this case, looking at this 4-hour chart, we've been trending down since November. Okay, it's not a very sharp trend at all. It's a very choppy one, and you could say it actually, it was in a descending triangle before breaking lower, and now, that previous support has turned into resistance, and now we're going to test it again. All right. So it would be in the direction of our previous trend, but I'm not looking at a bearish continuation. If it happens, then that's good. I would actually call that luck. But conservatively, I'm looking for a reversion back to the mean. When you have a range, the concept is that the middle of the range is a fair price, or the neutral, or the equilibrium price, right? The market tends to come back to the middle, but it doesn't stay in the middle, but it tends to, the further it goes from the middle, the more the market wants to return back to that. Okay, so I'd rather wait right now for the market to come back up to 1.0050 for a reversion back to 99.50 area. Okay. Okay. What else do we have here? Okay, we have some other pair, dollar crosses. The Aussie is especially weak right now. Okay. Now, this is a pair that I did get in a short position, but I got out early. Okay. So not a great execution of trade management on my part, but as far as entry, we could review this. I'm not going to get too deep into this because this is hindsight and I don't want to spend too much time on it. But you saw the market here break lower, come back, and test this declining trend line. At the same time, the RSI came up to test 60 after it kissed 30. So if the market were to remain bearish, 1.0050 was an important pivot. You saw this act as a pivot before as well. So, that's that. Not gonna get into too much of that. But now that there's a swing, I don't want to expose too much to Aussie strength, but I think here we do find some support at 1.03, above, a little bit above 1.03, because looking at the daily chart, this is a rising trend line. Okay, so maybe in the very short term we get a little bounce back to 1.04. Okay, but if 1.03 breaks, even if we do get a little bounce from under 1.03, we should continue to look at this as a bearish market. Okay, and then when the market, we have some pivots here, 1.30, 78, 80 area. Okay, so if the market comes back up 1.0380 up to 1.04, I would consider a bearish continuation to our next pivot down here, 1.0150, then down to parity, and really even down to 98, 60 or 70 low here. Okay. So Aussie is, I actually have a bearish outlook on the Aussie dollar, while I have some short-term bullish outlook on the euro and pound dollar. But euro right now, I don't think euro is showing much promise at the moment. Continues to consolidate. Okay, so here is the 5-minute chart, Sam Shale. One thing that would be a good sign is if the RSI here is held above 40. So that means if it's held above 40, at least we have consolidation momentum. But like I said, today in the U.S. session, if it can't break above 60, this is not a bottom, but rather a sideways consolidation before further dip. Okay. All right, guys, it's 11:45. I just want to maybe shoot the breeze a little here. What charts you guys are looking at? Let me know. I could take a look at those charts with you. Basically went over the pairs that I wanted to look at. So, give me some ideas. Maybe take a look at the euro pound, seeing that euro weakness. And, we might be entering into another chapter in the Eurozone crisis with Spain, right? There was Ireland and Greece and Italy and Spain now. So it's sort of a recurring theme. And once you have to know, you have to recognize when those recurring themes become or creep up into the forefront of traders' attentions, and that could be happening. That could be the reason for euro pressure. Here's the euro pound 1 hour chart, and I have to admit here I was caught looking at a bearish market. Okay, there was such strong bearish price action breaking below this trend line. Okay, but you see this market right now failing to confirm. Okay, now the bearish outlook could still pan out, but it's just not a trending market. It's a very choppy market. You see it's twisting and turning. Okay, and when you look at the daily chart, it's twisting and turning after a bear trend that since mid 2011, and that's also why I carry that bearish bias in the euro pound. Okay, and now we're seeing another day of strong bearish push. Look at all these days here of the bullish attempt. These are very weak relative to the bearish days, like this one and this one, right? These are strong bearish candles. And then you have such, relatively weak bullish candles between them. And at today's bearish candle, holds below some of these recent lows here around 83.30. That's it has that engulfing feel to it. Okay, and so the bearish bias continues toward the 82.20 level. Okay, any majors or at least major currencies you guys want to look at? I don't have all the exotics here. Let me see though. This platform does have a lot of charts, so let me see. Oh. So pound, Polish, is that PLN? Lottie? I don't see it here. No, unfortunately we don't have that pair, Edward. Okay, speaking of commodities, I don't trade them, but I do look at those charts and keep my eye on the gold chart. So let me share what I see in the gold chart. Okay. Let's go to the daily chart. Well, let me actually go back to the 4-hour chart. First of all, when gold was sliding like this, I was bearish, especially when the market crossed below 1666.50, what I see as a central pivot, and then respected it as resistance. Okay, so this was a bearish development for me, but it didn't follow through. Okay, and what the market is doing is actually now consolidating around that central pivot. Okay, I used this term several times today, central pivot. That's pretty much the middle of this range. Okay, you have range resistance up here, around 1800, range support here around 1521 area, and the middle pivot, a central pivot doesn't have to be smack in the middle, but it's near the middle and it has as a pivot before, given some elbow space, support, resistance. But now the market is creating a central pivot zone. And I think it's going to be important to watch this zone break for clues to direction. Okay, we established support here, 1628, and resistance here, or I would say slightly above our previous high here, 1704.60, 50 to 60 area. So I would say a break below heads toward the range support, break above heads toward the range resistance. And then from there, again, I'm looking at a range-bound market, looking for the market to return towards the central pivot zone. Okay. So in the medium term, I'm sideways, looking at a sideways gold market. When you look at it from a long-term perspective, it is bullish. All right. So I would rather look for support here. Okay. Than look for resistance here. All right. And finally, I'll take a look at gold. Look at oil. I have the WTI. Where did that pop up? Oh. And this is the 1 hour chart. Let me go to the 4 hour chart. All right. So it's in a consolidation channel. Okay. There's a bull swing here. So 103, it's approaching some key support levels in this WTI. Okay. We do have strong bearish price action, establishing some bearish momentum. Let's go to the daily chart. Okay. But I think we're going to see some reaction here. If we don't get 103, next support area, 101, rising trend line. Okay. Look at the RSI as it closes nears 40. So I think a bearish cycle is still developing, but this looks corrective to me. And I would say, if not at 103, 101, we could find some renewed demand to push the WT prices up. Okay. All right. So if right now the oil price is sliding, means the Canadian dollar is also sliding. It's correlated, right? Oil prices and Canadian dollar, especially WTI. If WTI slides further below 101, then dollar CAD, I would say, has some further upside. But hey, market testing this with the dollar loonie testing 1.0050. Maybe it's worth monitoring what's going on in oil to see if you want to look for resistance here. Okay. All right, guys, it's 11:55 a.m. now, so getting to the end of today's session. I'm gonna just open it up for some other questions if you guys have any. Otherwise, it's been a pleasure. I'm just gonna throw in a shameless plug here. This webinar is just part of what we do here back at fxtimes.com every morning at 8 a.m. The market intelligence briefing. I'm going to throw a shameless plug in there, a link to where you could sign up for our introductory discount. So when you're not at FX Street and watching the great variety of webinars here, I encourage you guys to join me at FX Times. Okay, so that's it for today. Thanks again for your attention and your questions. I'll be back here next month, I think the 17th and the 30th. Okay. We do like 50-50. Nick Nassad is our chief market analyst. He does the fundamental stuff, and he has a lot of insight in the Eurozone crisis and a lot of the major themes that traders and the markets are looking at these days. And by the way, my email is fan@fxtimes.com. I could give you guys some guest passes, to join us free. So yeah, just shoot me an email. You can also find me at Skype. I'm on there throughout the day. That's my Skype name, fan.yang.cmt. We do have a Skype room where we discuss the markets throughout the day, share trade plans, and what we're doing in the markets. Twitter, I don't actually have a personal Twitter account. I know that's strange these days, but you can look us up at FX Times. That's the Twitter account there. All right, so I'm going to stop sharing the screen now and wrap up today's session. Thanks again. It's been a pleasure.